All right, today I'm going to teach you exactly how to invest in stocks. I'm going to cover 4 topics. 1, what is a stock? Because before I even want you to put a single dollar into stocks, I want you to know exactly what you're getting yourself into. 2, how do you invest in a stock? What's the actual procedure of you getting into buying this and selling the stock? 3, what's the best stock to buy as a beginner? Where should you start off? I don't want you to get burnt in the beginning. I would go through all of the best stocks that I think that you should start investing with in the very beginning of your investing career. And 4, probably the most important point, can you get rich by buying stock, or can it be risky? We're going to cover all of that in this video. So this is the video you're going to want to watch if you're now starting off or thinking about starting into investing into the stock market. What is a stock? Let's take it this way. Let's say you have a company. You started a small little pizza shop. Business has been going good. You're getting customers and you're seeing potential that your business can grow. But you have one big problem. You don't have the money to expand the business. What do? You need to find investors. And where's the best place to find investors? Well, it's the stock market. And that's how companies, and that's why companies offer their shares and their stock. It's where a company sells a portion of their business to someone who invests by buying their stock. In other words, companies sell a small portion of their business to investors in order to raise the capital that they need to expand and grow. And basically, that is the simple explanation of what a stock really is. Buying a small portion of the company by buying into their stock. And by buying into their stock, what happens is you become a small owner of that company. Let's take example, all these big companies that we hear about, Nvidia, Tesla, Google, Alphabet. Google and Alphabet are the same. Microsoft, all these big companies, they're not owned by one single person. These companies are owned by multiple investors around the world. It's not like one person owns Google or one person owns Nvidia, although their CEOs do hold a large portion of the stock most of the time. Thousands and hundreds of thousands of people own these companies. So by buying a stock into one of these companies, you actually become an owner of the said company. Now, some of these companies may have very large shareholders who own a big chunk of it. But most of the times when you see these big names and these big companies, seldom ever would you see that it's owned by one person or one company. It is usually owned by hundreds of thousands of people, like you and me. The question is, how do you invest in stocks? How do you get to buy these companies? Well, you have to go into the stock market. Now, the stock market is a place where you go to buy and sell stocks. And no, it's not like a regular fish market or something. It's a little more sophisticated than that. Typically, you need to get access to the stock market to buy and sell the stocks. And what's the first thing you need to do in order to buy and sell stocks? You got to open a brokerage account. That's the only way. Now, it used to be a lot more difficult in the past, but it is so easy nowadays. It's like with a snap of a finger, you can have a brokerage account and you can start buying and selling into some of your most favorite loved companies. Trust me, it is a lot easier than you think it is. And I'm going to cover all of that for you today. By the time we're done with this video, you're going to be an investor. Now, how do you get a brokerage account? There are many platforms out there online. There are different apps and stuff that you can use to open brokerage accounts. If you ask me, typically, I would always say if you're already investing or you have your money parked with a reputable bank, most of those banks nowadays, they do have platforms that you can open a brokerage account with them. That way, it streamlines everything so easily, and I always prefer to do this. Let's say you bank with Bank of America or JP Morgan Chase, for example, here in the US. They have platforms where you can open a self-directed investment account, and you can actually have your checking account, your savings account, and your investment accounts all in one seamless account, so that when you open your online account, you see everything. You see your checking account, you see your savings account, you see your brokerage account. Everything right there makes it so easy to transfer in and out. So I would say the best thing, if you can, open your brokerage account with the bank that you already bank with, and that should be the easiest thing. Now, after you get that brokerage account opened, all you need to do is take some money from your checking or savings account and just transfer it to your brokerage account, and boom, you are ready to buy stocks. Now, in the beginning, what would I suggest? As you're a beginner and you're now starting off, I would suggest that you stick with some of the big reputable companies that we all know. Don't go diving into the riskier, smaller companies. Riskier, smaller companies can offer greater rewards. The greater the risk, the greater the reward. But for now, what I would suggest, and this is just from my experience, not financial advice, I would say stick with the good reputable companies that you know are not going to flop. They are too big to fail and they've always been profitable in the past. Stick with those in the beginning. When you get a little more experience, then we can move on to the riskier stuff. One important thing though, the reason why I really said to open a brokerage account with your bank, many of these accounts that you can open with your bank, they have 0 commission fees and 0 sign-up fees. You can trade all day long, all week long, 10 trades, 20 trades, 30 trades. It does not matter how many times you trade per day. You pay no commission and no fees. So why do you want to buy into these big companies? Well, when the big companies do well, their profits increase. And what happens when their profits increase? Your stock prices go up. The stocks that you own, you would see them in your brokerage account accumulating and rising. You see your money value accumulating every day as their stock prices increase. So stick with the good, reputable big companies and you would definitely benefit from it. In many cases, there are some companies who actually pay dividends as well. Now, when the company does well and their profits are high, they actually make a monthly payment or quarterly payment to you in the form of dividends. These are known as dividend stocks. I am going to cover the dividend stocks in this video. Pay close attention because this is really important. You don't want to miss a second of this video. And dividend stocks, let me tell you, it's probably one of the best investment strategies that you can use. Why do I say this? Because they pay you a dividend every month and this dividend gets deposited right into your account without you having to do anything at all. You don't even have to lift a finger. Those funds are going to be deposited into your bank account or your investment account and you can choose to do whatever you want with that money, whether you want to reinvest it into the same company, whether you want the dividend paid in cash. It's all up to you. It's so simple in those brokerages account. But dividend stock is a really good strategy. So we'll talk a little more about that soon. You know, a lot of times I hear a lot of people talking about passive income this, passive income that. It just pisses me off. Sometimes they tell you, open a business, passive income, do an Amazon store, it's passive income. That's not passive income. Collecting dividends off of a stock, now that's true passive income. You don't have to do anything. Buy the stock, forget about it. Open your account every now and then and you see your dividends being paid to you without you having to even lift a finger. And with these brokerage accounts, if for some reason you want to sell your stocks, it is so easy. Like buying and selling your stock is like just a click of a couple buttons, you're done. Now you may ask, Ahmed, why would I want to sell my stock? Well, there could be multiple reasons why someone may want to sell their stock. One, you just want to cash out. You made some profits. You bought it a couple of months ago, a couple of years ago, and you think it's time that you cash out and take your profits, and you want to sell your stock. Easy. Go ahead, go log on to your brokerage account and sell the stock. Profit is yours. Two, you just may not like the company anymore. You bought into the company when things were good. You were hearing positive news about it. Everything was great. Now things probably taking a turn for the worst and you just don't feel comfortable with the company anymore and you want to sell it. You can sell it from your brokerage account. No hassle. 3, maybe you're hearing some really negative things in the news about the company of lately and you think that company is going to take a turn for the worst and things don't look good. Yeah, you better sell it. Now, sometimes the news does not always give you accurate information. You got to do your own research and know what you're doing. But yeah, that could be a reason why you want to sell your stock. You don't have confidence in them anymore and you don't want your money parked with them. By all means, sell the stock. 4, you just think that you want to take that money and park it into another company. You saw a better opportunity. Maybe you had money invested in Tesla and you just don't like the company anymore. And now you just think you like Nvidia more and you want to sell your stock. So you sold all your Tesla stocks, you took the money and you bought Nvidia stock. That could be a reason you sell your stock. There are many multiple reasons why someone may want to sell their stock. And again, brokerage accounts, buying and selling, it's a breeze. You can do whatever you want. You can buy when you want, you can sell when you want, you can open your brokerage account for free. There's no charges in most places. There's not even commissions. It's the best thing that you can do. Do it right now. I would say do it right away. So what happens when you sell your stock? Well, as soon as you sell the stock is converted back into cash. What do you do with that cash? It's totally up to you. You can either take that cash, transfer it to your savings account, transfer it to your checking account, whatever account you have, and keep it in cash. Or some people actually opt and keep the cash in their investment account and wait for another opportunity to buy into another company whenever they see a good opportunity for it. It is a good strategy to keep your money, especially nowadays at the time of filming this video. It's a good strategy to keep the money in the investment account, because why do I say that? Most of the investment accounts that you can open with these banks, they pay a higher interest rate while you have your money parked there. Instead of putting it into a savings account that pays 0.01% interest, keep it into your investment account while you're waiting for an opportunity to buy into another company. Keep it there and take the benefit of getting a higher interest payment while you wait. You've probably heard of many people getting rich and wealthy off of investing into the stock market, and it is true. You can get very rich and wealthy investing in the stock market, but you need to know how to do it right. There are multiple different styles and techniques of investing in the stock market, and you need to find out which style suits you best, which style accommodates your life the most. All depends on how much you're investing, but let me go through all the different techniques and styles of investing, and you choose which one you think that you're most comfortable with. Now, you don't have to choose one style of investing. You can have multiple styles of investing. I do all types of investing. Let me cover all the different types, and then we can talk more about it later. So what's the 4 different types of investors? Typically the 4 main types of investors. Well, one, there's the dividend investor. These type of investors typically only buy stocks that pay dividends, companies that pay out dividends. Now, the investor either has the option to take those dividends in cash, or most of the time, especially the long-term investors, what they do is they take those dividends and they reinvest them into the company. They don't take the cash into their savings account or transfer it into a cash account. They automatically choose for the dividends to be reinvested into the company. And that is one of the main ways that wealthy people build their wealth over time. They just opt to have the dividends reinvested, and it keeps accumulating and accumulating and accumulating over time. One of the best and safest ways to build wealth. Now, this is one of the true ways of actually earning passive income, because think of it, you buy the stock, you put it in your brokerage account, and over time, it just keeps building and building and getting bigger and bigger, and you don't have to do anything. This is what I call true passive income. Not like real estate and buying online business. You still have to do a lot of work in those things. In this, you don't have to do anything. This is what you call true passive income. And you know what? This is one of my main ways of investing. I love dividend companies, and it's one of the main ways that I choose to invest my money, and I love it because you actually get paid for doing nothing. You buy it once, forget it, and you get paid every day. I just think it's one of the best ways to ever grow and build wealth long term. Let me give you an example of some of the companies that people invest in to get really nice dividends. They're companies like UPS, the delivery company. You know those brown vans that bring your Amazon packages to your home and stuff? UPS, called United Parcel Service. That's the full name. They are a dividend stock company. So the last time I checked was probably around 6% dividend that they paid, which was actually pretty good. That's one company. Another company, the telecommunication company called Verizon. Many of you may have a Verizon cell phone. They're a dividend company, so they actually pay dividends. So there are many good reputable companies that pay you dividends on a monthly or quarterly basis, and it's one of the best moves that you can make. 2, we got the buy and hold investors. These are the ones who tend to buy a stock and they never sell. They hold on to it for months, years, sometimes even decades. They would hold on to it and they would never sell it. Who's one of the most famous long-term investors that we know? Warren Buffett. He has kept stocks on his portfolio for decades and have never sold, and look where he is today. Is it a good technique? Oh my God, it's probably one of the best techniques. Buy it, hold it. Now, in order to hold it, you're going to have to go through some rough patches along the way. Are there going to be bumps? Of course they're going to be bumps, but you just need to learn to ignore those and ride the rough waves out. Over the long term, you're always going to benefit, especially if it's a good reputable company. So we have the dividend investors and we have the long-term investors. 3, the speculators. These are the ones who tend to go and buy smaller, riskier companies who are probably just starting out or just IPO'd, and they put their money into that, hoping for massive growth in the future. Now, could it work out? Of course, it could definitely work out. Could it go south? It can go south really quickly. And that's why speculating is very, very risky. But a lot of people did become very wealthy being speculators. There were some people in the early they speculated with companies like Nvidia and Amazon when the companies were like really small. That was back in the days when Jeff Bezos was in his mom and dad's garage or somewhere opening the bookstore online, and people invested with him back then, and I don't have to tell you what's going on with them today, right? It's like they really made a good decision. Risky at the time, but boy did it work out for them. But then there are the people who speculated on some companies and the companies totally went bust and they lost everything. Be very careful if you're ever speculating on a stock and buying a small company hoping that it's going to go to the moon tomorrow. Be extremely cautious. But one bit of advice I can give you for sure: don't ever fall in love with one particular stock, okay? What happens is if you get emotional attachment to a stock, that can sometimes cloud your judgment and you may not think very clearly about the stock at times in turmoil and stuff. So don't ever fall in love with a stock, okay? Keep your judgment really clear and very focused. Number 4, we got the traders. A lot of people call them the day traders. I just call them traders. These are people who buy and sell stocks like frequently. Some people buy and sell by the minute, by the hour, by the day. We have the weekly traders. There's so many different traders, but they turn over stocks really quickly. Buy and sell, buy and sell. Some of them do well, some of them don't. They're typically the ones who try to make a quick buck. Very rarely would they hold on to a stock long term, like a month or 2 months. They don't do that. They typically trade day to day. They do well sometimes. Most day traders that I know, they lose money. I would highly suggest staying away from this type of trading in the beginning because I do not want to see you lose a penny. Stay away from day trading. Let's stick with the bigger stock. Long term, we're going to be just fine. Now, if you are a risk taker and you do want to do a little bit of day trading, totally okay. Nothing's wrong with it. There's no right way or wrong way to invest in the stock market. But what I can tell you is if you are going to use this technique or this system of day trading, please, please, please do not use all of your money that you have in investing into day trading, especially into one company. Use a small percentage of it. Try it out if you have to. See how it goes and get a little experience, get a little more knowledge, and then you can probably take it a little step further, bit by bit, baby steps. And if you're doing that, you got to stick to building your knowledge and building experience. A lot of these day traders have multiple screens in their offices. They take a subscription for Bloomberg, which is probably one of the best places to get your financial news. They're glued to the screens. Now, do you always get the most accurate information from these screens? No, if you ask me. Typically, you get the news after the fact that something has already happened and big stock prices have already gone. You need to keep yourself very, very informed about what's going on, especially if you're day trading. Now, is there a right way or a wrong way to invest in the stock market? Actually, no. Any one of these styles can be beneficial. You have to figure out which one you're comfortable with and which one you would like to pursue, and you take it from there. Now, you may ask me, hey Amit, what do you think is the best stocks to buy as a beginner? There's such a wide variety of stocks that you can start investing now. They're the big companies, they're different sectors. There's the energy sector, banking sector, pharmaceutical, consumer and retail. There are real estate, technology sector. There's so many now. And there are also companies that typically only function in the US. They only sell to the US market. They're multinational companies that sell all over the world. There are so many different types of companies that you can buy stocks in. The list never ends. But in the beginning, I would highly suggest stick with the big reputable companies that you know not going to go anywhere in the future. They're only going to grow, and that is the safest path for you to take as you're just starting off. And why am I saying this? Because risk and reward. The higher the risk, the higher the reward. The less risk, the less reward, but you're going to get rewarded. I don't want you to lose money. I want you to make a little money in the beginning. Buy the bigger companies and get a little feel of the market. Get a little experience. Watch your accounts every day and see how things fluctuate and get a better understanding. And then we can get into the more riskier stuff later on. Now, a lot of people think that the stock market is this get-rich-quick scheme thing, and I'm going to start investing today and I'll be a gazillionaire by next month. That's not how it works. You don't want to be a gambler. You want to be an investor. You got to think long-term if you're getting into the stock market. And I want to see you succeed. That's why I can't tell you this enough. Stick with the bigger, more reputable companies and make a little bit of money in the beginning. The main thing is you never want to lose money. Now, if you want to take it a little bit further and be even safer, then I'm going to suggest that you stick with the index fund. What are the index funds? It's like a basket of stocks pooled together, all the different sectors. You got stocks from the energy sector, the tech sector, real estate sector, banking, pharmaceuticals, all of them compiled into one index fund. That way, when you buy into an index fund, you buy into all the different sectors of the economy. So should anything go wrong, and let's say oil prices go down, or let's say OPEC said that they're just going to produce a lot more and the oil prices tank and all the oil companies' stock prices start going down, or whatever the case may be, you're not going to get so affected because you're so diversified that your losses will be very minimal and it's going to shoot right back up very quickly. The best thing to do, if you want to be extra safe and cautious, buy into the index fund instead of buying into an individual company, at least in the beginning. Now, something really important, before you invest into any type of company, I want you to go and do proper research into these companies. You need to know everything about them before you put your money into them. I want you to investigate almost every aspect of the company. What do they make? What do they produce? Do they offer goods or services? Who are their competitors? What was their past profit like in the past couple of months or years? Did they give positive forward guidance for that company? Who are their competitors? Are their competitors very strong? Does the future of the company look bright? You need to know everything about that company before you go and you put your hard-earned money into them, because the last thing you want to do is put your money into them and the CEO makes a mistake in the company and their stock prices drop 50%. You know what's going to happen? You invested $10,000, you're going to lose $5,000 just because he made a mistake. So you need to know exactly where you're putting your money, and you need to know everything that you can about that company. And basically, my friend, that is about it for you to start beginning to invest in the stock market. You didn't think that was that easy, did you? It is so easy. Go do your research, find the best brokerage account, talk to your banker if you have to, and say, hey, Jim, John, do you all offer brokerage accounts in the bank? I would like to open one. And they'll be like, yeah, just log onto your online account and you can do it from there. It's that, literally that easy. Do your research, do your due diligence before you make any type of investing. Speak to a financial advisor at your bank. They might probably give you some good insights, and start investing. I'm telling you, it's one of the best things that you can ever do. This is the part where I say smash up all those buttons underneath there. Let's stay in contact, and I have so much more to offer you, so much more to give you. I have so much to discuss. So please go ahead, smash all those buttons there. Let's stay connected, and I'll see you in the next video.